And Maria, we're live. Welcome to the Builders and Funders Show.
Thank you for having me.
Now, we talked about, you mentioned the fact that you don't come from a traditional background. I think you were industrial engineering by education, and for most, beginning years of your career, you were industrial engineer before you got into the world of startups and venture capital. I want to ask
Correct.
you about that before we even get into your story with venture capital. Like,
Sure.
why industrial engineering? How did that come about?
Why did I study it?
Yeah, like why industrial
Why
engineering?
industrial engineering?
How'd you like
So
have to choose
I
that?
actually, I always liked math and science growing up. I think actually my mom read somewhere that women weren't as like leaning into math and science. So she put me in all these like chemistry and science camps when I was growing up, but I just loved it. And so especially math. And actually when I started undergrad, I thought I was going to be a German and psychology major, but then I just took a lot of the math and science courses and I came upon industrial engineering. And a lot of people don't know industrial. So typically you go in mechanical or biomedical. And to me, industrial was a really good mix of a lot of science and math and statistics but also business. And I think it was like really the bridge in my mind between those two worlds, engineering and business. And that was like kind of stuff that I was excited about, which turned out to be really good.
So we talked about how you got into engineering, industrial engineering. We'll do how did you then go from that to startups and venture capital?
Sure. Well, industrial engineering, I always joke that I'm not a real engineer because I can't code anything and I can't build anything mechanical. But jokes aside, it's a lot of statistics and a lot of business side. And so I actually started my career at GE Healthcare in supply chain and manufacturing, which is a pretty typical path from industrial engineering, which was an amazing experience. I learned a lot in my years at GE around leadership and building teams and also like how to make physical product, which is very difficult and not for the faint of heart, especially when you do it at the scale that GE does it in a regulated healthcare industry. But I noticed that everything I loved in my time at GE was kind of 0 to 1 blank page stuff. And so it wasn't typical kind of keep the same process and make it better. And that's what made me think that I would like startups. And so I actually worked for my first startup during business school. So I did my MBA at Harvard. And much to my own surprise, I applied to a couple of business schools and then ended up getting into a few. And I decided to kind of see what this quote unquote startup thing was all about. But I had, just to be clear, I was mostly someone who grew up in Wisconsin, spent all my time in, engineering or healthcare. So I didn't know what startups or venture capital looked like at all. So I actually cold emailed a woman who had done a distribution deal with GE in India and said, let me see what this startup thing is all about. Like, can I come work for you? And I worked for her and I was like, oh my God, I love it. And probably if I had had money, I would have like gap yeared and traveled, but I didn't. So I just worked in different geographies and saw the startup ecosystem there. So I moved to Brazil between business school years and I worked with like a YC equivalent in Rio and worked with really early stage companies. And the first time I worked for a startup, I was like, okay, maybe it was a fluke. Maybe I just really love this experience, like this particular company. And then I worked with a lot more startups in Rio and I was like, oh my God, this is it. This is my jam. I'm just going to spend my whole life in and around this somehow. And I tried to co-found something the second year of business school in Brazil. It's not really co-founding in many ways because you don't give up the same thing.
It was a clothing
As
company, right?
Yes, but it was really painful nonetheless. I went back and forth a lot and we talked to investors and we started getting off the ground and it just wasn't the right thing. And we had a co-founder breakup and then I ended up going to a startup in New York for a couple of years, growing an ad tech startup, Israeli ad tech. I was there from 0 to 40 million in revenue, so some scale, but not kind of unicorn status that we see these days. And then I went into venture after that. So it was actually, it was a friend I saw this weekend actually, who mentioned to me that she noticed I was always helping founders. So whether it was kind of tech founders in New York when I was at the startup or I was involved for many years with a group in Africa that worked with refugee founders. And my friend was like, you're just always drawn to helping founders. Why don't you go into venture? And I didn't know like almost anyone in venture. Actually, most of the people I'd pitched in venture were in Brazil at the time. And so I met half of the ecosystem in New York and learned about venture. And the rest is sort of history. I've been in venture for almost a decade in New York and London. And now I'm in SF.
I think at some point you were at RRE in venture capital. I think you were there for about 5 years. You had a story that you posted on LinkedIn about Move, and they were one of the companies you got to work with there. And you said, "I'm lucky to meet great founders every day in my line of work, but that day was one of those beautiful moments where you just know your gut deep down you know, down the two people in front of you were going to build something incredibly important, and impactful." Now, a lot of founders, they want to hear that from the venture capitalists they meet, right? Now, in this case, Wade Arnold and Robert Smith, they were able to make you feel that about their company move and how they were going to revolutionize payments. And they've obviously become very successful. They've gone on to raise from Andreessen Horowitz and Bain. So they're kind of living the dream. I'm sure they're still having their struggles, but they've been quite successful in fundraising. What was it about that conversation where they sat across you? How was it that they made you feel that way? Because that's like the dream. Like everybody wants the people to feel that way when they sit across them.
So I think that's a very unique one, but I maybe take a different lens than some people. So I think a lot about the human side. So maybe more than most VCs, I actually spend a lot of time going in depth on someone's background, who they are, why they tick the way they do, what they want to do in this lifetime, and I feel like I remember that conversation so well, like it was yesterday. We had tea from these little teacups I had in my office, and it was literally the last physical meeting I took before the March week of pandemic hit, with founders. And so there's a lot of Zoom life after that. But you know what it was in this particular case? Um, they had both worked together for a long time. So there were some unique things to their story and some I won't share out of confidentiality too, but like there's unique things to their story that I was like, these guys are just literally in it for the long haul and they're going to build something absolutely incredible. And but in this particular case, if you're going to do deep tech payments, you actually need to really understand payments. And like very few people have built into, Wade had been, at that point built into like 42 different core banking products. And so like he literally knew payments so well. And what was really funny is he just wanted it to be better. So if you think about the payment stack, I think also like it was aligned to my thesis, but it pushed my thesis even more forward. So like when a lot of people backed a lot of companies that were on top of banking as a service. So there's a lot of companies built on top of Snapsify. I personally didn't do that because I felt like it created less attractive margins in the business because you're building on someone's tech, so you have to pay them, but also less great products because you don't own the technology layer that Snapsify built, and so you could get to market faster. And there are some products for which that is okay, but you gave away margin and you mostly gave away control over the quick product iteration cycle you want on the tech. And so most of the things that I had backed during that period in fintech, there was another company I backed that's doing incredibly well called Novo. And in the same moment where like Mercury and other banks, which have gone on to do well, were building on top of somebody else's tech, Novo actually built their own tech and went into a community bank core bank. They went into their core banking system. And so to me, that was an ability to create a better product. And so what was funny is what Wade and Bob were trying to do was literally go even a layer deeper. So like Synapsify would be like, if you build anything in payments, there's kind of 4 players, FIS, Fiserv. You don't have to go into all of them for the purposes of the podcast, but what Move is doing is like they can go very deep. They can go straight into MasterCard and Visa payment rails, and like they're really doing the tech in a different way, which I really believed in. But in order to do that, you have to know it really well. But I think the thing that was very interesting is Wade had basically already been successful in this case and retired, but he was so frustrated with this problem not existing, that he was like, I just kept thinking I was too late to build it and people were going to build it for 10 or 20 years. And it just never kept getting built. And so at some point I was just like, nope, I got to come back out of retirement. I have to build this. So in that case, it was like their passion and clarity for what they wanted to build and the fact that they had both been building together in the same space. But I do want to caveat that because that's not necessarily transferable. The thing that gives me that feeling in different meetings is different things. It depends on what the business is, who the founders are, what they're trying to go build. I will say there is a lot of common themes. Like most of the people that I back tend to have this sort of magnetism. It doesn't have to be charisma, by the way, but like they end up attracting people and resources somehow because of what they're doing or their domain expertise, etc. And they tend to really want to solve the problem. And so I think you do get like that concept of founder market fit. But I want to caveat it a little bit because I feel like we've almost overcorrected to that in VC and startups. And so like now every founder is coached to be like, oh, I just had this problem and I solved it. And I'm like, you didn't actually like have that problem, right? Or it makes people focus on problems that don't really matter. Like, so I was standing in line at a bar to get a coffee cup and I was like, this is a problem. Like sometimes not all problems are like venture scale solvable, right? And so I think I don't care if a founder like has been dying to solve this for decades. I do think that it makes it easier to go through the ups and downs. But I feel like it's also super valid for a founder to see a market opportunity that maybe they didn't live directly or didn't think about for the last 15 years and see it and be like, oh, I want to work on this. But then the way you demonstrate from there is that you like went and talked to like 200 people, right? You know, you didn't talk to like 10 people and be like, I'm going to build this company. Like you actually got interested in the problem and you spent time in it. And the reason for that is not that it's necessarily going to be successful if you talk to 200 versus 30. But I think the point is that building a company is never easy. It is always up into it's like never up and to the right. Even if the numbers look like that, even like the move journey, you're like, oh, it looks great. Like more money, more problems in a way. Like it's always really hard to build interesting, game changing things. And so in order to do that, you have to be willing to go through all the ups and downs. And I feel like the more you're invested in solving that particular problem, and the more you're working with people that you already know you can work well with, which is the case in it with Wade and Bob. But a lot of times there's co-founder breakups because you haven't stress tested the relationship. And like there is almost nothing that's going to stress test a working relationship like founding the company together.
So you mentioned kind of one of the things that the VC world is overcorrected to is, do you have some kind of personal connection to the problem? And that's kind of led to a lot of people who are like finding problems that don't exist, and they try and connect to their personal experiences. And you mentioned, well, if you do think you have a problem, go talk to a bunch of people, like, and not just 30 people, like 200 people, like just validate that problem exists and people deeply care about it and it matters. And kind of like in the case of, you know, these two gentlemen, they actually, there was an actual problem and they had waited for decades and other people around them felt it, so you could see that. But I want to talk to you specifically about the pitching part. So that's kind of like the business foundation, right? It's the idea, it's the validation, it's the thesis. But then there's the part about communicating it. So I remember when I was 15, I was an apprentice at this VR company, this VR startup in South Korea. And the founder, his entire day was just pitching to VCs. And he just could not get a break. Like everyone would give him a pat on the back, say, you're doing awesome. And he just, you know, he wouldn't actually raise. And it was super stressful. I saw his hair start falling apart. Like it was crazy. He was losing his hair literally over the stress. But when I did kind of like look at his pitch, he wasn't very good at communicating. He had this great idea, he was doing this great thing, he had great talent, but just the communication, the pitch, he couldn't really get the opportunity across. So you mentioned you're meeting a lot of founders in cafes now in San Francisco, and they're pitching you on a daily basis. You probably get exposed to hundreds of pitches every month. What is it about like the successful communicators? And like what kind of, how do they successfully communicate?
I think this is one of the most important things to underscore is like it's how you tell the story. So there's kind of these like false milestones that don't matter anymore. Like you get to a million ARR and you do a Series A. That's totally dead. That doesn't matter at all. But I think that people think, what do you expect to see at seed and A? And the funny thing is, at the earliest stages, basically until Series A, and arguably even Series A, but maybe not, but until Series B, until you get to growth B, C, D rounds, nothing is, there's no kind of thinking about your revenue and doing a multiple on that evaluation. So the valuation is set by the amount of money you're raising and how much you're diluting. And it's pretty much kind of a similar range for most people. And so the difference is in the story and how you tell it, and also making sure you have a venture opportunity in front of you. I think this is also really important. Is like, I think Mark Suster said it, but like venture dollars is, it's like rocket fuel. So if you're building a rocket, you need it. But if you're not building a rocket, it's also going to drive you nuts to take it. It's not going to work. So I think make sure it's a huge opportunity that you believe can get to a couple 100 million in revenue, like multiple billions of valuation, right? Because that's how the venture power law works. But as an example, I just passed on a founder last week and she was amazing and lovely. But in her particular business, the multiples are just way lower than in software. And so one of the reasons I passed is I said that I'm so sorry because I think you're really lovely and I love this problem in a way, but I don't know if this problem is venture scale. And even if it is, because your industry trades at 1 to 2x multiples, you're going to have to get to such a higher revenue bar to get to the valuations you want to. And so I think actually thinking about like the shape of the business you're building and the cash flows you're building and all of that, and making sure it's venture is number one. And then the second one, which is everything, is how you tell the story. Because at the end of the day, I think that a lot of people know deeply what they're doing, to your point, but maybe they aren't communicating it the right way, and putting more time and energy into communicating it. And you can get feedback from people you know. Like even if it wasn't a VC, I'm sure your founder could have pitched you or pitched someone that didn't know the business and say, did that make sense? Did you understand it? But the story is everything. And if you look at a VC day where you might have like 10 pitches in a row back to back, just standing out in the first 2 minutes is exceptional. I remember one founder, in COVID, she just like opened, she had a company doing software for business development for the enterprise. But she just opened up, like asking me three questions about if I've ever done a deal with anyone in any job and like, have I ever experienced, like she just started with three questions and it just, I remember it because it was just different than how most pitches start. And so I think anything you can do to kind of shake it up a little bit. And I think also selling the vision that you see. You don't want to oversell where you are today, but you also don't want to undersell where you will be in 10 years. And I think sometimes I actually say this a lot to underrepresented founders. I've found for some reason that underrepresented founders, when they do a 5 year forecast, they make it more realistic. And then it looks not venture fundable because the numbers don't look that high. And I always say, like, it doesn't, like, make sure that you believe that this business can go into hundreds of millions of revenue. And you can show that. Like, at a seed stage, no one's going to hold you to those numbers. But if you don't believe it can be that big, you should know that the person before you and after you walking into that room pitching someone is pitching a business that is that big. And so you're getting compared in relative. And so make sure that this isn't the moment to be realistic at the seed stage. It's the moment to understand what you think is really achievable in the long term. And then you can back that out. And I think the other thing about telling the story is telling the you, right? It's like, why are you solving this problem is as important as why is this problem good, important to be solved right now the way you're doing it.
I think there was an essay you wrote some time ago about venture capital. It was this idea of value neutral money. I want to get to that because let's say you've got a good problem. It's solid. You know it is venture scalable. The total available market size is massive. You could get to these crazy valuations, and you could be venture scalable. All these things. Let's say check, 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 check. You've got all of them, and you're a great communicator. You've got the story down. You've got a great pitch. Now you're starting to get the term sheets. I want to talk about the essay you wrote on this topic, and I want to ask you about a couple passages. But before that, let's talk about the idea of value neutral money and what that essay was kind of on. I want to hear from you if you could like summarize it real quick.
Yeah, yeah. It's kind of a play on the AI paper, Attention is All You Need. I wrote it actually for a founder in France that I was working with. I wrote it for a bunch of founders actually as I was spending more time in AI. And it came to me as an idea to write it in that kind of format. But it's a concept that I've thought about for a long time, which was that I kind of held these two truths that seemed opposing for a long time. And I was like, how are they both true? And one is that really good venture capitalists can actually be game changing. I've seen it firsthand. I've seen it from a lot of different places. And like, I think venture capitalists can actually be extremely valuable. I also think venture capitalists don't really matter. Like at the end of the day, the best founders will kind of get on with it with or without you. And I've seen many a founder in the presence of good or bad VCs build anyway, right? And so like I also don't think you should overstate your role as a VC. I always say, particularly in my case, like my job is to have like a much wider and better network than you in whatever you need. And so like if you're facing this problem with product or you need this introduction to someone, like hopefully I've been spending all of my time building incredible networks for you so that I can get you that answer faster. But you're going to know your business far better than me. And if I pretend to know your business better than you, like you need enough knowledge that you can help. But if I pretend to be more of an expert in your field than you are, like you should probably run 1,000 miles the other direction because you're building in it. I'm not. By definition, I'm a VC, right? So um, I think that the only reason those two things are true, that VCs can be valuable and they cannot matter, is that there's actually a whole bunch of VCs that are also value destructive. And I don't want to like be like bad talking the entire industry because it's not like that. There's good and bad in anything in the world, but there are VC practices that can be extremely destructive to a company and to a founder. And I've seen that many times over. And so I think when you're a founder choosing, there are a lot of things like brand and partner and all that. But I think it's honestly, as long as you choose value neutral money, so money that can be irrelevant or positive to you, you're already doing better. And especially, this is also even true. We talk about VCs and in people's head is always like the same 10 funds or whatever. There's like hundreds and thousands of VCs. And so sometimes I've seen bad acting stuff from people who are kind of quote unquote not a traditional VC as well, where like they don't have the same incentives, they don't have the same structure. So the way that they show up to a board, the way that they take ownership, the way that they take certain rights from founders might look very different than a traditional VC would do it. And so, yeah, I think that's kind of the concept of the essay. It was a bit tongue in cheek, but it was kind of fun to put it out there.
You mentioned how they show up, and you talk about this exact passage, like the usual litmus test for the right relationship is what happens when shit goes wrong. Can you call them right away and tell them what happened, or you know, do you know that they'll listen to you and make you feel better? And then you go on to talk about kind of like the bad situations you've seen where venture capitalists have tried to force companies into like literal bankruptcy, or they force founders to make different political decisions, or they've even said we're not going to fund you, and then when another VC fund came along, forced them to take their term sheet. So like all these crazy things have happened. And you mentioned one of the things you can do is follow like the talent and look at who great founders are taking money from, who are ahead of you, and maybe reach out to them, even just like cold outreach. But obviously that's like one, and you kind of have to rely on the fact that these founders are going to be honest with you, because a lot of times there is kind of like politics, and they might not actually tell you the full truth and the full reality of what their relationship is like with those venture capitalists. Or maybe at the time it's good, or but
Hmm.
in general it's not as good. So what are some other ways you can kind of BS test venture capitalists to see, are they really going to show up for me? Are they going to screw me over at some point? Like, what are some other
Yeah.
ways?
I think you also want to ask for references, but I actually wouldn't ask for the obvious references. The obvious ones are like the ones that look like they're up and to the right, because it's actually easier to be a good VC on that journey. I think I would ask for references where it went sideways. Either the company went under, or maybe it was eventually successful, but not for a long time. And I would talk to founders who had an experience that wasn't an easy, straightforward path. That's one. And definitely I do think if you cold reach out to other founders, if you get them on the phone, they will often be very honest, because they want to, if it was a bad experience, for sure, because they want you not to have it. For example, just to give you a specific case where you might have some value destructive behavior, for example, it can even come down to legals. One situation that we had in a prior fund I was at is that a founder had a clause that allowed them to be blocked by the next round by their board, right? And usually you wouldn't push back on that, because usually the board says yes. If you get an up round, they're excited about it. But it's really not necessarily intended only for that purpose. So you always have to think about what is the good and what is the good case, but what is also the unintended consequence of something. Because you can also have a VC block an external round because they think it's too high of a valuation and can do an internal round instead. And especially I've seen sometimes where you get VCs who maybe come from a different background, like come from private equity, for example, or something. And sometimes I see some more downside maximizing behavior versus upside capturing behavior. And so you just want to think through when you're doing the terms of your company, what that might look like, and what are some of the unintended consequences of different control that the board of the VCs might have.
Absolutely. Now, before we started recording in the lobby, you said you've been very interested in AI for the past, especially couple of, I think, months and even years to an extent, and you've been looking into investments there, and it's something you're really excited about. The other day, I heard a real interesting take, and I want to get your opinion on this. So, someone was talking about how now the kind of capital requirements to build a startup and reach specific milestones, it's the amount of money you need to do that is decreasing. So like now for marketing, for example, you could have AI create and generate creative assets that would have taken entire departments to create, and you could have a single marketer generate those with AI products. And same thing with like a couple really really smart engineers, you could 10x their output with just like the right AI tools. So I want to ask you, like, do you think there's going to be a corresponding decrease in check sizes from venture capital funds as it gets less expensive, and it's not like as doesn't take as much capital to like build these companies and get to specific milestones?
So this is something I've actually been thinking about a lot. Right now, I actually see it, to be honest, like a bifurcation, right? So I see a bifurcation of two. It's either much more expensive to build a company or much less expensive. So if you're doing anything foundational model, like let's say you're doing protein foundational model or anything where you're not leveraging somebody else's data set and you have to build your own, it's actually much more expensive to get something to market. But you also have the other extreme, to your point, where I think it's not crazy that we might see companies. I mean, even look at Midjourney, right? Look at how much they're worth versus how many employees they have. You might see this phenomenon, and me and some other people in the industry have talked about it, where they do a single round and they never raise money again. So I think it's actually one of the reasons why people are coming earlier and earlier stage. It's one of the many reasons. There's a number of industry changes and shifts going on. But I think it's something where I'm excited to be an early stage investor for that reason. But it is something that I think about as I think about future funding rounds for companies we back, how much capital will they need? How much dilution will they need? I do think we might see that. I think what the flip side of that is, if you're building something that's much cheaper to build, the chances are you're probably not differentiated by the technology. It's probably more of a wrapper of AI, which is actually less personally where I'm investing at the moment. But I think a lot of those companies will grow, but the ones that have venture scale will be kind of obvious who's the winner by Series B and Series C. It's a little less obvious who's the winner at seed because you have to have some really good distribution advantage or take on the space that nobody else can do. Because if it's pretty easy to make it on top of an existing foundational model, then lots of people can copy that, right? And so then the edge becomes in something else. And so I think it really depends on what scale you're talking about. What I find interesting, and one of my I have sort of 6 or 7 areas of AI that I'm spending time in right now. And to your point, I was kind of around for the 2016 bubble, 2015 bubble, depending on how you count it, when I was at a New York venture fund. But I feel like I've been spending a lot more of my time there in the past year, as everyone has been. And one of my thesis areas is that you'll actually, if you think about consumer brands, a couple years ago, maybe you had kind of this proliferation of big brands at first, which was like Harry's and Casper and Warby Parker. And then there was a big question mark about, are these really venture brands or not? Like, how big is this outcome? And can you get multiple billions of dollars as a company valuation? And then we saw really this proliferation of tons of consumer brands that could get to 20 to 50 million in revenue, but they're not going to be billion-dollar outcomes. That's super interesting. But what's interesting then as a VC is usually to play in the layer underneath that, right? Like that's where you get the Shopify's and the reverse logistics companies that have served that audience. So like for me, as a pre-seed and seed investor, even if I'm not going to back the 2/3 of the YC companies that are probably building something interesting but harder to tell who's going to win in the short term, I do really want to know what they're building on top of. And I think that's absolutely an area that's interesting is, if you build AI first from day one and you have less capital and you're building with a smaller team, the way you do everything is different. The way you make product decisions is different. The way you look at data, the way you market yourself. And so you're going to need different infrastructure and software to do that well. And I think that's a really incredibly exciting opportunity as well.
Speaking of AI, and I love that take, by the way, but another thing I want to ask you about is you mentioned you were able to get your master's from Harvard, and it's obviously one of the most prestigious schools out there. When I speak to folks my age, education often comes up, and there's this whole kind of like go to college, don't go to college. Is it important? Is it relevant? And I used to in a lot of my high school classes say I'm not going to college, and I would skip the SATs, and I was kind of it was very anti-school, and people would often still think I'm crazy. And even though there has been a little bit of anti-college sentiment, people would still look at me like you're stupid for why would you think that? I mean, it's still going to be relevant. I want to get your take on because you follow AI, you see the kind of way it's disrupting things. Now the you could literally in seconds reach any kind of information you really need, and the obviously role of education is changing. The question I want to ask you is twofold. One, if you're a founder, how important is education or going to college for your success? And the second is, as an investor, when you're evaluating founders, when you've got and both are building kind of similar things and similar background, but one's got a degree versus one doesn't, does the degree kind of impact the decision at all or how you view their merit?
For me, the degree definitely does not impact the decision. I back people without degrees on many fronts. I think even without a high school degree in one case. I as an investor evaluating a founder, it does not matter to me. And I tend to prefer like founders who are pretty scrappy underdog and like maybe they don't come with certain stamps and brands. And I guess for me, it's really like I don't have a prerequisite. And I think like I do think about founder traits, but I don't really truly assess on them because it doesn't work like that. Like if there was a recipe and it was really easy to figure out which companies were going to be massive, massive hits, my job would have been automated away a long time ago and AI would already be doing it. So like I think that there isn't a recipe necessarily. So, but I don't care about that at all as an investor. And in some ways, like some of the best investments I've seen are people who've dropped out and did something really interesting at 13 and 17. And I'm a mom of 2 kids, so I think about their education. I think I don't know what education will look like in 10 to 20 years. And I suspect that it will be forced to change a lot. But I'm also just going to make a case here for a second for education more broadly on two or three specific fronts. I think one is that learning is always important. And I think the value, if you're going to skip traditional education and just go build something you love, is that it's very rewarding because you love it. But I do think we're losing something if people don't have some sort of broader breadth, right, for society at large and for building an interesting world. I think in some ways, like if you only learn one thing really deeply, you are kind of missing something. So I think there's case for like a base. And I think in sometimes it's an advantage. I think one of the only places where I can like truly argue that Europe versus the US AI ecosystem have pros and cons, but like one case in which I actually think Europe is ahead of the US, which might be controversial in AI, is deep sciences, because the education system in Europe around physics and math and really deep science has been incredible, and people really study it for a long time. Many PhDs come out of there. And so I don't think a PhD necessarily translates to a founder all times, but if you're now going to look at how AI applies to biological structure, many things in the world you can learn overnight. You can watch a YC talk, you can talk to a few founders, and you can figure it out on the go. Deep science is harder to do that with. And so sometimes you just need to know information, right? And so I think that's the second piece. And then the third piece, which is more like how I personally, if I was 16 and evaluating my options, I don't think it's always about career maximization, you know? I think learning maximization is great, but it's also about life experience, right? Like I hate to say that, but like a huge piece of college is not what you learn. It's meeting friends and like understanding how to interact with society in certain ways and getting to try leadership roles and things. And, I think we've almost, we can't go to the other extreme where if I wanted my kid to just be successful, like I probably would have them play very differently than if they also should probably also enjoy their childhood. Right. And I think that like sometimes we fight biology too much. Like evolution is a much slower process than we would probably like. And I think the question is, what do you get out of an experience? So even though I don't think I would need an MBA, and many people don't need an MBA to do anything these days, I would still go back and do my MBA experience. But it's not because I need an MBA to be a VC. It's because those 2 years of life experience for me were absolutely incredible. But also, like, maybe it's because of the experience I came from. Like, I didn't know many industries, but a lot of Americans don't spend time in other countries. And one of the classes I took at HBS was called Biggie. It was Business, Government, and International Economy. Every single day, you looked at a different country, you read the history of the country, you looked at the trade balances of the country. You almost always had someone in your class from the country, and you thought about like how this country is going to go forward and and so much of being successful in business and in society is you do need to understand geopolitics and what's happening around the world and why. And so I think regardless of whether or not you choose to do college or not college, and I'm sure there's lots of reasons for both, I would think about like what is the holistic life experience I'm getting, and just make sure to be curious outside the obviously applicable stuff. Because I think that's where the magic happened. Like truthfully, one of my favorite quotes is that innovation, like you have to be steeped in things for innovation to happen. Like often what happens is you take an idea from here, you take an idea from like some weird poetry, and then you put it in a tech company in your head, right? Like it morphs in your head, but like you're taking things from different places and cross pollinating. It's rarely like Newton, right? You don't just get hit with an idea. And so if you're not constantly putting yourself out there with different types of curiosity, you're probably limiting the innovation and the impact you could truly have.
Yeah, what you said reminds me of Paul Graham had a lecture at Stanford, and he was talking about how you actually shouldn't start a startup in your like 20s, and you should just like get deeply curious about some technology and spend time in college learning. So I think it checks out with like the advice of the most famous, probably arguably one of the most famous people in venture capital.
Yeah, you're right on the Paul Graham thing. I don't know if you saw, but the CEO of NVIDIA gave a speech to, I think it was Stanford grads saying, I wish you pain. He was basically saying, like, I wish you pain and hardship, or else, you don't actually grow and learn how to experience things, which is an unusual thing to wish somebody. But I actually think we've talked a lot in this podcast about technology and startups and how to raise money and how to build companies. But back to your communication point, it's far deeper than that. Like, emotional regulation is something that is not talked about enough in society at large. But like I think about it when raising kids, but it's relevant every single conversation I have all day long. So you're gonna stuff is gonna happen to you, and you're gonna have emotions associated with that. And learning how to respond to, observe, and react to those emotions so that you can better deal with other people is super important. So whatever you're gonna try and do, you have to know yourself. And so when I think back to your original question about education, it's also like, how do you become a person who is mature in that sense over time too, which I think will also help you build a company.
Yeah, speaking of Jensen Huang, he had another clip where he basically was talking about how he wakes up, he works till literally he sleeps, and when he's not working, he's thinking about work, and he basically works 24/7, like 365, 7 days a week. He's not stopping. And people were obviously kind of turning into a meme, and there were a lot of comments on Twitter. But jokes kind of aside, there was I had a Argentinian venture capitalist. His name is Hernan Herrao. Just like a couple weeks ago, and he said he actually thinks this old school stereotype of the founder who just does nothing but work kind of needs to go away because it's hurting a lot of people. And just a few hours ago, there's a Twitter post about how founders are more likely to struggle with depression and being bipolar and all these different problems. And obviously, loneliness is a massive issue. Brian Chesky did a podcast where he was like, I was so lonely. I shouldn't have done that. I was in a very bad place mentally when building Airbnb. Now it's obviously does billions in revenue, but he was literally miserable for a good chunk of those early days. In terms of like as a venture capitalist, I'm sure you talk to a lot of portfolio companies and a lot of those founders. I'm sure they're going through it, and often it's bad then good. So how do you recommend, or what kind of advice do you give to those founders to like deal with the loneliness and deal with the depression? And then second part of the question is like, what should their work schedule look like? Should they be taking Jensen's advice and working 18 hours a day and just like working nonstop? Or Hernan said he recommends his portfolio companies do 8-hour work days. Even early stage founders, they just do the 8 hours, stop, and then like take the time for themselves. Where do you stand on that?
I don't think I should recommend a founder's workday. Like I wouldn't recommend and prescribe how they should run their company. That's their job, right? Um, I do have a couple of thoughts on this. I think I'm glad you pointed out because it's a really challenging role to run a company. And I think holding space for the human side of that, whatever that journey looks like, is a really important thing for your investors and anyone around you to do because it's real. And I think there are resources you can get for founders, but I think just being more open about it. I actually started a podcast called Founders Uncut. And my first episode was talking to Tom Blomfield, who's now a YC partner in SF, but he built a company called Monzo in Europe and it's phenomenally successful. But he talks about how hard the journey was and is vulnerable about the mental realities of that. And I think that we need to have more conversation around that and people need to create like save more space for the human side of the journey for sure. In terms of the workday, it's something I struggle with myself, to be honest. Like I've never worked a 9 to 5 job in my life. Actually, the only time I did, I was unhappy. I knew it was something I didn't like because I was working 9 to 5. I don't know. I've thought about it also from it coming from different cultural perspectives. I think you should build the life you want to build, right? And I think that assuming that you have nothing outside of work is unrealistic. And I mean, personally, if I was a founder, I wouldn't want that. I have 2 kids. I enjoy them massively, and I have a husband and I have friends, and but I also work a lot, and I think that you should build the life you want to build. And we have so many founders who have kids, and so they're obviously doing things outside of work, and they should be. It's a holistic life. At the same time, I have founders who like that's all they want to do is work, and that's what they want to do, right? And I also think that I wouldn't go to the other extreme. I think building a startup in 8 hours a day when somebody else is working 17 hours a day. A founder once told me that. He's like, I don't want to do that. So it's very much to each person's point of view. I do think we need to be mindful of the guardrails to prevent burnout and help people on the mental health journey that is realistic around being a founder. I also think sometimes if you are doing this because you don't think it's going to be hard work, you shouldn't do it. Like it will be hard work. And I think I don't go to the extreme of like you should have nothing else in your life and you should never sleep at all. But like you need to take care of your body to show up well. Like I think that's important. At the same time, I almost think sometimes in society we've like lost the part of the conversation that is about working hard. And maybe that's why he's saying it just to provoke a conversation. I don't know. But I think that anything worth doing comes hard. Like if I think about anything in any job I've ever been in, venture or not, like I've worked extremely hard in any of the cases where I've achieved anything that I was excited to achieve. And so I think you're going to have to work really, really hard to do something really, really hard. And most of the companies worth building that are trying to change something will not be easy by definition. And so I think if you're a founder who's like, oh, I heard it's cool to start a company and I think it's going to be like the Silicon Valley show and I want to have like drinks at 5 p.m. Yeah, it's probably going to be harder than you thought it was. But if you want to put your time in doing something really meaningful, it's probably hours worth spent. Like, so it really comes down to the person. I don't think either extreme is good, but I also think there's probably truth in both of those points of view.
Makes a lot of sense. I do want to ask you about a post you made. You when you were at RRE, you got to work a bit with James Robinson, and unfortunately, he's passed relatively recently. But he was very successful CEO of American Express, and he also built RRE, which is incredibly successful venture capital fund, incredible portfolio, incredible team. Now, you did make a post about stuff you've learned from him, but I want to ask about maybe things you've learned in terms, maybe like more tactical things people could learn from him, like on how he carried himself and how he showed up, and just like habits he had that people overlook that made him as successful as he was.
Yeah. Oh my God. I didn't think I was going to tear up on this, but the second you brought it up, I did. Uh, yeah, there's a bunch of them. The first one is that one, work hard. Like he was literally in the office every day, first one. And I don't think you have to do it in a physical office, but he worked incredibly hard his entire life. He was exceptionally kind to people. He just always had a way, like back to the point about emotions and EQ and working with other people, like to just make someone feel comfortable, whether you were getting waited on by somebody or talking to the CEO of like one of the biggest companies in the world, he would make that person feel comfortable in a half a second. Um, he had a great sense of humor. And back on the communication, he used to like he has an incredible network. And one of my roles used to be to help our founders like reach out to people in his network. And the number of times that he would redline an email before he would send it to someone he knew was hilarious. Like a founder would be like describing what they do, and he's like, "This is not plain English. This is like too technical, too technical. This is." He would redline an email like 17 times, and he's like, "Tell me in plain English, very simply, what you do. And if you can't do that, then I'm not sending this email on." And like, um, he was very, very good at communicating and very good with people and just curious. Like he used to joke that he repotted himself in industry every couple of years, which he did. And he was CEO of American Express, and he was a venture capitalist, and he was a huge philanthropist, and he just always got curious about different spaces, and I think that served him really well. And I honestly, it still makes me sad when I think about Jim because I was very grateful to get to work alongside him and know him, as well as a lot of the other great people at RE. There's phenomenal people in that firm who have been really great humans along my journey, and I'm glad to have worked with them. So, yeah.
That's incredible. What kind of, I'm always curious about these types of people because a lot of what makes them so successful is like their daily habits. You mentioned, he was always at the office, incredible hard worker. What are some maybe other like daily habits of these people do you notice that make them so incredible? Like what like on a day-to-day basis, like what kind of things do they do that like, that make them so great at their jobs?
I think that going back to the earlier question, I think it wasn't just all work with nothing else. Like he had a family, and he also he'd go to the gym like almost every day. Like he used to joke that he could bench press so much and do so many crunches. Like I think he would do like 500 crunches a morning every single morning. Like I used to travel with him on the road, and then I would feel guilty because I was like I didn't work out this morning. But I think this is also I think we as American society want these recipes in a way. And maybe they are there, maybe they're not. It's so specific to the person. But I think really successful people tend to have habits that suit them, that bring out their best and keep them productive and keep them from burning out, quite frankly. So I think it kind of ties back to your prior question, honestly.
Yeah, it's incredible. I
What I
think
will
that
say is I don't
please.
necessarily know how he did it. It's his gym magic. But I think that he's a great example of being kind to people really paying off because there are just I think it's been rare for me to see a man or a woman where so many people from so many moments in their life would literally drop anything if he called or if he wanted something, because he would do the same for them. And I think that that really paid off in the long run for him, and it was a beautiful thing to see. I remember being at a meeting where two banks were merging, and we showed up, and that got announced, and the meeting probably should have been canceled because we were not the top thing for the day for them, but they were like, "Oh, I'm never canceling on Jim." And I think he brought that out in people. It was a beautiful thing to see.
Might be a bit of a silly question, but what was his bench?
I actually don't. I want to say 265, but I actually don't know. I That's probably too high. I think it was though. I don't know. I don't remember.
Yeah, I had a friend that we basically for a period we were calling out tech CEOs to bench press battles. We tagged Brian Chesky and all these different people trying to learn
What's
what
your
they do.
bench?
I can do like 8 reps of 225. I think max is like 245 I've gone to.
Yeah.
I think
Okay,
it's
good to
decent
know.
for an 18-year-old.
I really want to be able to do a pull up again. That's my
That's fair. You
current.
just got to do a lot of lat pull downs, I think. You should be fine. A lot of bicep, a lot of tricep workouts, and you should be able to crush it.
Thanks.
Wow. Well, that's it for the questions I've got, Marie. Is there anything that you'd like to add or talk about?
No, thank you for doing this. I think it's good to kind of drop the curtain, if you will. And I don't like feeling like there is one. So it's just good to get people's perspectives and founders, VCs all over the place. And I appreciate you doing that.